and welcome to Startup Street. I'm Ritu Singh, and with me is my colleague Shruti Mishra from the Mumbai studio. Here are the top headlines from the startup space. E-commerce platform Myntra unveils a zero-commission model for all new homegrown direct-to-consumer partner brands that are joining its marketplace. The model is going to help brands seeking to expand their digital presence beyond their own social media channels and website.
Fintech Skydo secures final authorization from Reserve Bank of India for cross-border payments. It's among the first few cross-border fintechs to secure this license. A move will help deepen its product offerings and expand coverage across traditional trade corridors.
Deep tech startup Eon Space Labs develops India's lightest multi-spectral Earth imaging payload Mira, set for launch aboard ISRO's Polar Satellite Launch Vehicle on the 12th of January. It will enable near real-time in-orbit processing of Earth observation data while significantly lowering data download costs.
AI platform for interior design studios Project Studio raises undisclosed amount from Modular Capital with participation from VFounder Circle, EvolveX and Tharper Innovate. The funds will be used to enhance AI capabilities, boost India presence and support international expansion.
And Elon Musk's AI tool Grok turns off the image generator option for most users and limits it to paying subscribers. This after widespread outcry over the generation of sexually explicit images of users. Sources say the Indian government is unhappy with the response so far from Grok and is considering legal action.
Well, those were the headlines we've been tracking for you this evening on What's Brewing Today. India's beauty boom is colliding with a new consumer reality. People want results, not complicated, time-consuming routines. Antinom, a performance-led beauty brand built for fast-moving women, has raised 28 crore rupees in a seed round led by Fireside Ventures with existing investors V3 Ventures and Rucum Capital, both doubling down just months after the launch. The brand claims it is big on multifunctional, climate-tailored products that simplify routines without compromising results and plans to roll out up to 7 category-creating launches this year. Joining me now is the founder and CEO of Antinom, Aparna Saxena. Aparna, welcome to Startup Street. You describe Antinom as an intentional beauty brand for fast-moving women. Who is this woman? What does her daily beauty routine look like today versus what you wanted to become, Aparna?
Thanks for having me. So this woman that we describe is the modern Indian urban woman, and her schedule is now overbooked. She is commuting, she is a professional, she's working, she has a social life, she's taking care of her kids. And the over-fragmented beauty market is actually not catering to her lifestyle.
Okay.
So Antinom comes in and kind of does that.
All right. Antinom's core promise, Aparna, is condensing multiple steps into one product. How challenging is that from an R&D perspective, especially in a market as diverse as India? Also, climate-tailored beauty is a big theme in your pitch. How central is this to your overall product strategy?
No, absolutely. So actually building for Indian climate is very hard. As you know, there are different climates in Bombay versus Delhi, Bangalore, and all pan-India. So really what we do is spend a lot of time real-world testing with our community of women who utilize these products on a day-to-day basis. Climate-tailored beauty is not just a marketing angle for us. It's an actual product architecture. So we blend ingredients in a way that actually caters to the Indian climate and assists these women from going from point A to point B.
All right. Aparna, you're planning to launch up to 7 category-creating products this year. Give us a sense of what's coming and the gaps you're trying to solve.
Yeah, absolutely. So category creation is something that's embedded in us because we are trying to challenge the norms, as our name suggests. The first few products I can in fact show you. I have them right in front of me. This is a utility bottle that can be attached to any bag. And in fact, it's a shower in a bottle called Shower in Seconds, made with lactic acid and no alcohol. Women can carry it anytime, anywhere, and use it anywhere, also intimate areas. So this one is catering to them so that they can go from point A to point B very seamlessly and don't have to spend that added time getting ready.
Okay.
Similarly, we're going to touch different points and problems that they face on a day-to-day basis.
All right. You've raised a seed round and are seeing double-digit repeat rates month on month. What's driving that repeat behavior, Aparna? And also walk us through your price points and overall pricing strategy.
Yeah, no, absolutely. I think the pivotal thing for us is the fact that these are utility-centric products. So in fact, the packaging actually helps the formulation, and that's prevalent with all the products that we have. So we didn't go with the bottles that look alike. We went with, okay, how would the user actually use it? So visible utility mixed with high usage frequency, which is that these are day-to-day products and not for special occasions. These are things that women will have on an everyday basis. I think that's what's bringing back customers to us. And our price point is anywhere between $8.99 to $11.99.
Okay.
Keeping the promise that we actually combine 5 to 6 products into one.
All right. You're scaling, Aparna, both D2C and offline. How many offline touch points are you eyeing, and which channel is actually giving you faster learning and stronger unit economics right now?
Fantastic question. So for offline, we will do that very selectively, high cluster points with corporations or women where women commute. And that's something that we've thought about, but we haven't entered yet. But the quickest learnings we are getting is from our D2C website, because user feedback and turnaround time is super fast, and we're able to engage with our customers. In fact, our Instagram page is very highly active because we speak directly to working and busy women of India who relate to our content and are able to understand these use cases which nobody had solved for before.
Okay, let's talk about India's beauty and personal care market. It is projected to hit $30 billion by 2027. Where does Antinom see its biggest opportunity? And in a crowded space dominated by global giants and influencer-led brands, how do you build a defensible brand without getting lost in the noise?
No, absolutely. The way I see the $30 billion market opportunity is not by volume, it's by behavior shift. Consumers are becoming increasingly time conscious and value driven, which means that they are looking for time saving products. So in fact, that's how we get them. That behavior shift we capture as a first mover. And because our products are easy to explain and utility centric, I think we'll stand out in the long run. The multifunctionality also making it a super value driven decision for the customer.
All right, take us through your growth targets, Aparna, for the future in terms of revenue and expansion plans. Like you mentioned earlier, there are 7 category launch that are lined up for the year. How soon?
So we've been in market since July. We've already catered to 22,000 customers.
Okay.
We anticipate that this number only grows further to 200,000, 300,000 in the coming year with our expansion into 7 SKUs. I think for us, however, we remain true to the brand's voice that we will be multifunctional, utility-centric, climate of India, and will give instant results. So we'll deepen our understanding in that and spend the raised amount that we just did into expanding it very thoughtfully and selectively. So I think the next year is really important to us to win that trust with the customer and kind of enter every pain point and solve for every pain point that they have during their day.
And in terms of revenue, is there a target?
There is no specific target because we are very, very specific as to how many pain points we want to solve. But from this point onwards, at least a 5 to 10x is what I anticipate.
All right. On that note, it's time for me to wrap up our conversation. Many thanks, Aparna, for joining us on Startup Street, and wish you the very best with Antinom.
Thank you so much.
All right, Shruti, thanks very much for taking us through that. But let's move on to Arrowhead, which is a voice AI platform that's building human-like sales agents for the financial services sector. They've raised $3 million in a seed funding round that was led by Stellaris, with participation from angel investors as well. Now, this company, it enables banks, NBFCs, fintechs in India and globally replicate their top-performing sales agent behavior at scale through this ultra-human voice AI bot to deliver conversations. Now, currently, they operate across India and Southeast Asia, serve more than 50 customers across the BFSI spectrum, and this funding is going to be used to strengthen their core AI models, expand technology, and go-to-market team. So let's go across to Devyani Gupta, who is the co-founder and CEO of Arrowhead, for more on their plans ahead. Devyani, welcome to Startup Street. Thanks for your time here. Tell us about the $3 million funding that you've got. It's your seed funding round. In terms of priority, break it down for us. What goes where?
Yeah, thank you so much for having me. So essentially, we raised this $3 million funding for us to focus on 2 main things. One is scaling our team, so scaling across tech and GTM for us to be able to cater to more customers in a much better way. And number 2, for us to be able to continue building proprietary technology to build even higher converting bots than we are today.
Well, Devyani, it's an interesting concept. You're replicating what humans can do with AI. Some of us are worried about that, but the business has already seen a 5 times jump in annual recurring revenues between August and October. Currently, where are you at? Will this run rate continue? How do you think you'll exit the coming year?
Yeah, we're seeing a very strong demand and growth in India. Every bank and BFC that we're working with, it seems like they want this technology yesterday, which is great for our business. We're seeing this continue to grow. We're working with some of the largest enterprises, like you mentioned, Bank of Baroda Cards, Aditya Birla Capital, Paytm, and many more. And we're only seeing this increase further. So increase across customers, but even within customers. Today, most customers are deploying maybe less than 10% of their volume on voice AI, which they're hoping to increase to 80% plus within the next year.
I see. Let me then ask you in this way. What is going to drive revenue growth more? I mean, is it the higher wallet share from your existing clients, which is across the BFSI spectrum, or new additions, you think, newer areas and beyond BFSI as well? Because sales agents are required everywhere. I wonder, why not insurance? Why not other spaces?
Yeah, no, insurance is actually a key space we're working in. So to answer your first question, it's definitely going to come from both. Existing customers, we're expanding very rapidly. We've actually already had customers use us for 100% of their sales calls. One customer where we did health insurance sales up to 20-minute calls without customers knowing they're talking to a bot, where we increased conversions by 45% for them. So they replaced 100% of their human team with our bot. So within existing customers, but then again with new customers as well. So on a monthly basis, we're getting dozens of new clients expressing interest in working with us and using our bots. So we're continuing to grow there as well.
So these dozens of new clients that you're getting, you say on a monthly basis, at what pace is this expected to grow? I mean, there are only so many players in the market, unless, of course, you count the smaller NBFCs and the newer fintechs that are coming in. How large can the base grow? And hence my question, aren't you looking to diversify outside of banks and fintechs?
Yeah, so actually within banking, the interesting thing is that one of the benefits of using voice AI is that you're not just replacing the volume that you have today. Because with voice AI, you have no cap on volumes, you can actually increase the volumes even more. So as an example, for one of the use cases we're doing, their human agents today were only calling their bottom of the funnel drop off in their app journey. So people who drop off at the payments page, we today with the bot are also calling their top of the funnel drop offs. So people that drop off at the sign in page, which is about 30x the volume, and they didn't even have human bandwidth to cater to that. So the market size itself is expanding with the potential of voice AI because you don't have any volume capacity limit. So we're actually very bullish on BFSI specifically as a sector, starting with India and expanding across Asia and the Middle East as well.
Okay, speaking of those markets you mentioned, India and Southeast Asia, where you're live with about 50 customers at the moment, which geography or any particular segment is growing the fastest for you today? And, in future, are you looking at, again, geographical expansion into other markets?
Yes, definitely. So India is where we're seeing very, very rapid growth. India is definitely an early adopter in this space. I think the reason for that being that this is much more cost effective. India is a very cost conscious country. If you're able to reduce costs of your calling by 2/3 and maintain the same top line, if not increase it, it becomes a no-brainer for most companies. So India is moving very quickly on this. We're seeing Middle East and Southeast Asia coming up right after that. So our plans are to expand to that later this year as well.
Well, speaking of cost, Devyani, I mean, enterprise AI can also be pretty capital intensive. How long does this $3 million last you, and when do you think you'll have to come to the market again?
So we are looking to come back into the market actually later this year based on the milestones we're expecting to hit in our revenue. There is a lot of capital required to be able to train better models, to be able to build more proprietary technology, and hence build higher converting bots. So that is our goal. Although the capital will last us longer, we believe we can go to market sooner based on the revenue milestones we're targeting to achieve.
Okay, let's end with that target then. Your press release says this market is a $3 billion market and the penetration is less than $50 million. How much of this market do you think you can grab for your company?
So our vision as Arrowhead over the next couple of years is to be the largest and best voice AI company for BFSI across the world. So we're looking to be the market leader in this. And I think we already have strong tailwinds to show that that can happen. In India, we're already seeing that. So that is our path to success over the next few years.
And we wish you the best with that, Devyani. Thank you so much for your time here today, and we'll continue to track your journey very closely here. Thanks very much.
Thank you so much.
Well, thank you, Ritu, for that. It's time for us to head into a short break. Coming up next, Alia Bhatt's fashion brand Edamama has expanded into personal care with a new range of baby care products. The founder shares how the brand's strategy is carving out a competitive edge in the kids' fashion wear space. Stay tuned.
Welcome back. You're watching Startup Straight. Now, Alia Bhatt's brand, Edamama, has expanded into personal care with a range of baby care products as well. In a conversation with my colleague Shilpa Ranipeta, Alia Bhatt explains the company's strategy behind the move in this fiercely competitive children's care market. And she also talks about the brand's next phase of growth and her other investments as well. Take a look.
So Edamama's strategy from the very beginning, even when we started with our clothing, was to build a brand where the idea of a sustainable clothing brand or a conscious clothing brand didn't have to feel boring and muted and mundane and didn't have to seem extremely inaccessible in terms of its price points.
Right.
So similarly for personal care, our endeavor was to bring in the color. So if you see the packaging is full of color, stick to our principle, which is conscious, clean, toxin, free, harsh chemical free, dermat approved, pediatrician approved, all those things that you would look for in a personal care brand, but also keep the price points very accessible.
It's a very crowded space. You have some very established brands also, very big conglomerates also doing this. So, what prompted this particular expansion?
Absolutely agree. It's a crowded space, it's high competition, but I believe in the product and I really think it's a strong product. Personal care is one of the largest categories and verticals that we had to build within the brand. So this was actually my first sort of big project when the Reliance partnership sort of came into play. This was the first thing that we worked on. So it's been 2 years. Even I want to be completely transparent. Our packaging, we are a sustainable brand, but our packaging is plastic. Why it's plastic, I need to even explain that.
Right, please do.
Because we realize, so it's a virgin food grade recyclable plastic. It's not recycled plastic.
But talking about the company, help us understand how large or how's the growth been, and how much of an expansion has come in ever since the Reliance deal also has happened. So what's your footprint like as we talk about today?
So we started off as a D2C brand, and with Reliance's presence, we have now 5 EBOs, and out by the end of this year, we will have 6 more. So a total of 11 EBOs across the country. For us to go from D2C to retail was essential because we always have had the dream that Edamama should be an experience-led brand. And we did feel that our presence in key malls and key spaces were very important. For now, we are in Mumbai, Noida, Hyderabad, Bangalore, but we do plan on diversifying, and that has been the huge, contribution for Reliance. Because number one, of course, their distribution chain is large. From amping up the supply chain, also understanding different verticals from our toy range now becoming more and more, robust. It's accessories as well, and personal care being a huge category.
Right. What about more verticals? Because there's a lot of baby accessories, and there's a lot more that is there.
We're already doing baby accessories.
Okay.
In a controlled sort of way. But because I was talking a little bit about animals, I also see that being a huge vertical as well.
Okay. You think you'll move into pet care?
Yeah.
Okay,
That's
interesting. Interesting. So Edamama will be a child care and pet care brand.
Yeah, because some people who don't have children have pets.
Of course, and they're as good as children. They are children for them.
Yes, absolutely.
Fair
and
enough.
You can have children and pets at the same time and want to care for both of them, of course.
Okay,
like I do.
Interesting. So how big is the brand? Is that something that people share with us in terms of because as a business channel, we try to understand how the brand is growing, how big is the business?
So I always stay away from talking about numbers, but growth you would see just in terms of the product range increasing and our verticals increasing, of the response that we're seeing from the consumer.
Looking at your investment portfolio also, we see a lot of celebrities also looking at health and wellness now. Is that something that you want to get into?
Well, never say never, but I think for now, in terms of personal care, my interest has only been building it under Edamama.
Okay. Well. Any recent investments that you've bet on that you're very happy, proud about, that has really taken
Super
off?
Bottoms is one of them. Pool, I'm so proud of as for the brand also, the way it's doing. It's just flying off the shelf. So I think for me, the investment market again has to feel very as personal as a brand building would.
Well, that was Alia Bhatt on a recently launched range of baby care products. It's the time of the week when we bring you a wrap-up on the key startup deals signed over the past week. This week, 16 startup deals worth $108 million were signed as per Venture Intelligence. Some top deals include fitness startup CultFit's $50 million fundraise, followed by health fintech startup Even securing $20 million. Industrial AI startup Spectre.ai, space tech startup Take Me to Space, and e-commerce enabler Nitro Commerce also raised funds this week. And with that, it's a wrap on this edition of Startup Street. For more news and updates coming up on the other side.